My name is Jimmy Hicks, and today I'll be discussing one of my favorite personal finance topics, life insurance. I know, exciting. When I say life insurance, what are the first two things that typically come to mind? Most people will say 1, death, and 2, paying a premium. Now, as my friend and mentor Brock Jolly would say, what sounds more exciting to you, dying so someone else can enjoy the money, or paying a premium? But what most people fail to realize is that life insurance is first and foremost an income replacement tool. In other words, owning life insurance allows one to do other things with their money that they might otherwise not be able to do. Many call this the permission slip concept. I'll explain this concept in more detail after I first describe the two main types of life insurance, term and permanent life insurance. Term insurance is essentially renting a bag of money that pays out if you pass away during the allotted time. For example, let's say I purchase $1 million policy that has a level premium for the next 20 years. If I pass away at any point in those 20 years, my beneficiaries should expect to receive $1 million tax-free from the insurance company. But what happens after 20 years? In most cases, one can continue to pay for the policy, but the premiums will be significantly higher each year until the policy reaches a point where it is cost prohibitive. If one needs coverage for life, a term policy probably is not the most cost-effective option, although it is the least expensive type of life insurance in the short term. Permanent life insurance, on the other hand, is the only other type of insurance known to mankind that is guaranteed to pay out 100% of the time, as long as premiums are paid when due. Hate to break it to the bad news that if you didn't already hear, but none of us are going to make it out of this world alive. Therefore, it's not a matter of if permanent life insurance will pay, but rather when it will pay out. For that reason, permanent life insurance is much more expensive than term insurance and is typically used for long-term financial planning purposes. For example, one can use permanent life insurance to help protect against the loss of income in retirement if a spouse were to pass too early, thus forfeiting Social Security income, full pension benefits, and/or annuity income that is based on a single life, i.e. not joint life. There also exist permanent life insurance policies that have cash value that can be accessed at any point during one's life without restriction, and that distribution may be free of tax and market risk. Back to the permission slip concept mentioned earlier. If I have a source of liquid, interest-bearing, non-market correlated cash that can be accessed tax-free, that may allow me to take on more market risk with my other investments. Last but not least, many permanent policies issued today are hybrid, long-term care policies where a portion of the death benefit can be accelerated or paid out monthly while one is living to help cover long-term care expenses. There is no such thing as a one-size-fits-all life insurance solution. So it's critically important that you plan comprehensively so that you have the right type of insurance throughout the many different phases of life. I personally own both types. My personal strategy is to convert my term insurance every so often to permanent insurance, so that one day when my term insurance will be expiring, I have converted most, if not all, of it to permanent insurance. This strategy may not be a good fit for everyone, but with the right amount of time and proper planning, most folks can go into retirement with adequate permanent life insurance to cover the key risks that should be mitigated, such as premature death, market volatility, and long-term care concerns. I hope this vlog was helpful as you plan wisely for the future. And if I can ever be a resource to you and your family, schedule a complimentary, no-obligation consultation with us at your convenience by visiting our website, www.jlhfinancial.com. Thanks for watching, and I hope to see you again soon.